Kemira has just published its Q1 2023 results. Mikko will sum up again the first quarter. Hi Mikko.
Hi there, Tiina.
So, we had a record strong quarter. Let's hear some more.
Well, indeed, we had a strong start to the year and financial performance was really excellent. So we saw both strong revenue growth as well as profitability improvement during the quarter. And if we start from the revenue, so on that side, growth was driven by higher sales prices in both segments, whereas then our sales volumes, so they declined, and this was particularly due to the soft demand that we saw in the pulp and paper segment. On the operative EBITDA side, that grew to a new record high, 193 million euros, and also relative profitability, the operative EBITDA margin, that reached a new high of around 21%, and this was due to improvement in both segments. However, our expectation is that this exceptionally strong margin development will moderate somewhat as the year progresses. Then if you look at the segments, so we had excellent performance in both segments, so in pulp and paper and industry and water, and both segments reported strong revenue growth as well as margin improvement. If we think about the sort of underlying market demand, so they developed sort of according to expectations. So volume demand on the pulp and paper side, that was soft, and this was due to the slowdown in the global economy. And then we also did see significant inventory destocking in the customer value chain. In the other segment, industry and water, so their end market remained resilient on the municipal water treatment side, whereas then on the industrial water treatment side, there we did see a decline in demand, and this was due to the decline and slowdown in the global economy. And then thirdly, in the oil and gas market, that market continued to grow during the quarter.
Why did Kemira announce a strategic review of the oil and gas business?
Well, indeed, we are currently evaluating sort of what are the long-term strategic alternatives for the oil and gas business, and these alternatives do include a potential divestment of the business. If we think about the rationale behind the review, is the fact that we have expressed a desire to grow in water-related applications, and this combined with strong growth in the oil and gas business and also margin improvement. So it now is a good time to think about the best long-term strategic alternatives. As such, there is no timetable to communicate at this point, but we'll then naturally update the market as the sort of review progresses later this year.
Sales volumes declined, but still Kemira upgraded its outlook this year. What were the reasons behind?
Well, the end market development and demand was largely according to expectations in Q1. So demand in volume terms declined as we had expected, and our expectation is that demand will decline somewhat during this year. However, on the other side of the equation, so what we did see was that variable costs, energy included, did decline faster than we had expected, and our expectation for this year is that variable costs overall will decline. So as a result of these two factors, we did upgrade, as you said, the outlook for operative EBITDA, while then the revenue outlook then remains unchanged.
Thank you for the interview, Mikko.
Thank you, Tiina.